like to hear from someone who's optimistic about the economy, someone who doesn't think a double dip in housing will destroy consumer confidence and believes the plunge in job growth last month was just a temporary blip. Well, today is your lucky day because Robert Stein is with us from Washington. Robert is one of the most accurate forecasters in 4 separate categories of economic data, from existing home sales to unemployment, making him a Bloomberg best 4 times over. He's a senior economist for First Trust Portfolios and formerly an assistant secretary for economic policy at the Treasury Department. Robert, before we get to the U.S. economy, I need to ask you about Europe. Are you similarly optimistic that the Europeans will sort out their differences, figure out a way to get money to Greece, maybe make the bondholders take a bit of a haircut or suffer some kind of a technical default, and everything will be fine?
Well, I don't think, I'm not sure if you would call it optimism. I think a Greek default is inevitable. However, I think the Europeans will get their act together and provide whatever aid is necessary so that Greece doesn't default until at least 2013. Basically, the Europeans are going to give the banking system in Europe time to basically earn themselves out of a situation where a Greek default would render them undercapitalized. And so they're just buying time and kicking the can down the road a couple of years. A
phrase we keep hearing over and over again, but it also applies in some people's analysis to what's happening in the U.S. economy with the stimulus that has been pumped in. Let's talk about why you're an optimist. Why is it that you think housing perhaps isn't going to be as bad as some fear, and that the jobs picture will improve at a faster clip than many people believe?
Well, let's take housing first, Eric. First, the bad news. We still have an enormous excess inventory of homes around the United States, given what our demographic needs are. I estimate that at 2 to 2.5 million homes. However, then you have to figure out, when is that excess inventory finally, at long last, going to be gone? And I don't think it's going to be gone until 2016, 5 years from today. But what that means is that the pace of home building, which is now unsustainably at rock bottom lows, is going to have to increase about 150% over the next 5 years.
So you expect that the housing picture, or the improvement in housing, is going to be, we're going to see it show up in new home sales and construction?
Well, in home building, not necessarily as much new home sales, although I think new home sales will increase over the next few years. The home ownership rate is likely to continue to fall, and rental occupancy is going to continue to increase. But regardless of whether we finance our homes by owning or renting, they have to be built either way. And so, over the past 2 years, we've built about 600,000 homes per year. Normal is 1.6 million per year. So I think we're going to see a massive increase over the next 5 years, so that at the point in time when the excess inventory is gone, home builders are meeting, whether they're building for owner occupants or rental occupants, are meeting normal demand with normal supply. Not to go back to the unsustainable boom that we had in the previous decade,
Robert,
just to get back to normal.
Robert, okay, understood. Back to normal. How about jobs? Where are we going to be with the unemployment rate next year come election time?
Well, we think we'll finish. Well, right now we're at 9.1%, Eric, as you know. We think we'll finish this year at around 8.5% and finish next year at around 7.5%. We've seen a decline in the unemployment rate of a little more than a half a percentage point over the past year. We think that will accelerate in the year ahead as the auto industry bounces back very sharply from the problems related to the Japanese disasters.
Robert, great to have you here on the Inside Track. Robert Stein, senior economist at First Trust Portfolios.